And if they don't work out, you take a loss. If they work out, you make a little bit of profit. But I don't think that's a great way to trade. I did that for years, and I had 50-50 success. Some months I made money, some months I didn't make money, and it's a very, very, you have to have some market direction, and if they don't work out, you get killed. And if they do work out, you make a little bit of profit, and that's not a business. That's a gamble. This is a business. We're managing our portfolio by the numbers. We're going to make. We know how much profit we're going to make every month. Okay, then I go into closing our positions, our profit and loss. Let's take a look at our profit and loss closing positions, and this is absolutely critical because what we want to do is we want to close out the positions at the right time. And this is where you want to take a look at this picture again. You want to analyze your picture because when you get to close to expiration, that white line moves all the way up here, and it's very, very close to your expiration full profit. And if your position is looking really, really good and it's in the center, you might want to hold it another day or two just to see how prices go. But in general, once you get to the point where you've got a substantial profit in these positions, you can close them out. It's not going to hurt. You still make your profit. And you know what? You don't have to be in a hurry about closing out your positions, which is nice. Because you have so much room to move in price on a daily basis that it's not going to hurt you if you don't close out your position one day, or you just you got busy with something and you want to close it out, but you forgot, or you didn't get the price you wanted, or something like that. You can afford to be patient with these positions. You don't have to. It's not like day trading where every little tick counts. In this type of trading, you're putting on positions, and you don't have to settle for market prices. In fact, I don't suggest you settle for market prices. The nice thing about the thinkorswim platform is it allows you to get in at the mid prices many times. It depends on the market, of course, but you can get in the mid prices, and if you can't get in the mid prices, then you can move up your little bit by little bit, and those the money that you save from trying to get mid prices really helps pay for all the commissions that you're going to be generating. Now, the commissions are very, very reasonable on thinkorswim, so I don't even want you to consider that because they pay for. These positions pay for themselves and make a great profit. So commissions are really not a major component of your expenses, but they are an expense, and that's the only expense that you have in this type of business. That's your overhead, your commissions, and that's it. I think they charge $1.50 for an option trade. A couple of options is going to cost you $3. One option is going to cost you $1.50. So it's not a big amount of money, but it is overhead that you have to pay. So closing out the positions is the next video set that I do, and it's very important that you understand how to close out your positions. You're not in any hurry. You're not day trading, so you can actually take your time, close out your positions, make sure you do them the right way, collect your profits, and you know what? Move on to the next trade. Then finally, we go into the big picture. I take a look at some technical analysis stuff. I have a proprietary technical analysis tool that I use to determine how the market will open every single day. And it's been right 95% of the time. It's very, very close to being right almost all of the time. And it's very interesting because a lot of times that the futures will trade before the option stock market open. And a lot of times, I remember just recently, a few days ago, the futures on the S&P 500 were down like $9, which is a pretty big down move before the open. And so everybody expected the market to kind of open way down for that day. But my proprietary indicator indicated that it was going to be a flat open. In fact, it might be a little bit up, and it did. It opened basically down about 5 points, and then the Dow Jones Industrial started going up 20, 30 points. So it's a very, very interesting indicator to use. It's a proprietary indicator that I came up with, and I'm going to give that to you absolutely free as well. I also talk a lot about the VIX, and if you don't know anything about the VIX, don't worry about it right now, but it's a very, very important tool for stock trading, and especially for our types of positions. Probably one of the most important tools that you can use to determine future direction of stock market prices, at least in the short term. So that's it, guys. That's everything that I go over in this course. And, in one, even one trade dollars is going to cover the cost of this easily. So, depending on, I mean, if this is the type of information that you want to learn, then I suggest that you sign up. To tell you the truth, the type of information that you're getting, I didn't get at that $5,000 seminar. Now it's all online. All you have to do is log in. New videos are going to be released every single day until the entire course is available online. But I want you guys to start out real slow. I'm going to give you the introduction videos. I'm going to go through all the Greeks. I'm going to go through trade selection strategy, portfolio building using this TOS platform, portfolio management using these Greek numbers, the numbers we manage by the numbers, adjustments, closing positions, and the big picture technical analysis. So I go through everything that you need to start putting on these trades. And, like I said, I've been to $3,000 seminars and $5,000 seminars, and they don't teach what I'm teaching you. This is the real deal. This is how market makers and floor traders who know what they're doing are doing. And it's based on their trades or making their money through the spreads. They're actually managing portfolios in this manner. So I can't say much more than that. This is the real deal. You're going to get real information. In fact, I have been a market junkie now for about 20 years, maybe even more than a BizOp junkie, and I find this absolutely fascinating. I am slowly replacing my online income from marketing to just trading. And, like I said, it takes me 15 minutes a day, and I'm done. And I go do whatever I want to do. Go shopping, go to a restaurant, meet some friends, take my wife shopping, do whatever I want to do. Summer's coming, so I'll probably play a lot more golf. And, these positions do not need to be managed on a minute-by-minute basis. You take a look at the open, and here's something that's very interesting, and I'll give you a little tip. Generally, what happens is there's a couple different kind of days in the market. One are trend days, and those days usually start up pretty good, and then they continue to grow higher and higher and higher and higher. The market goes up or down, and they trend all day. There's other types of days in which the prices will fluctuate within a range, and the majority of the markets these days tend to fluctuate within a range and don't trend that well. And that's why a lot of stock traders and option traders who depend on trends to make their money are having a really tough time right now. So these types of trades are even more important than to learn how to do in the market, because this is a consistent way to make money every single month. So that's it for me today. Hey, I really hope you join me. So anyway, that's it for today, guys. Hey, I wish you the best. Trade with confidence.